be 100% sure that your securities or the thing that you have invested in through the mutual fund will not magically disappear somewhere.
Hi, welcome to the channel, The Mutual Fund Guys. As the name suggests, this is the channel to know everything about mutual funds in India. I'm Mahesh Bhagwat, and with me is Samir Gilani, and we are partners at AMS Investments, a mutual fund distributor registered with AMFI. And we have currently over 100 plus, hopefully, satisfied clients. Having got this introduction out of the way, we would like to dive straight to the topic at hand. You have all heard about this saying, mutual fund sahi hai. What we would like to discuss today is why. Why mutual funds sahi hai? Or as Samir likes to say, hidden benefits of investing in mutual funds. So over to you, Samir.
Thank you, Mahesh, for that. I want to actually take a step back and discuss some of the basic structure of a mutual fund and what exactly is a mutual fund. I know many people watching this will probably know what a mutual fund is, but I want to walk you through what exactly is a mutual fund, why it is called a mutual fund, and then perhaps talk about some of the hidden benefits of being invested in a mutual fund. So let's go back a bit in history. The concept of mutual funds, although it's not really verified, but it started back in the 1700s when one Dutch gentleman, whose name I will not even attempt to pronounce, okay, he basically collected money from his friends and family and pooled it into a fund. And then through that fund, he went and bought a bunch of bonds, I believe, at that point in time.
Okay.
So that kind of sparked the genesis of the industry, and it has been a thriving industry since then. It's a multi-trillion-dollar industry in India and globally as well. So the concept of a mutual fund is a mutual fund will collect money from people like you and me, even from the larger institutions, and corporations.
Yeah.
Pulls that money into a fund, a
Yeah.
vehicle, and through that vehicle, it will go and invest in the securities, right? Whether it's stocks or bonds or real estate or many other products. So that is the essential concept of a mutual fund. It's called a mutual fund because there are mutual beneficiaries of that fund. So every time the securities that have been bought in the fund, if they rise in value or if that fund gives you any kind of returns, everyone benefits out of that. So that's why it's called a mutual fund, and there's a mutual objective to sort of gain money or gain returns from either the income that the fund generates or the capital appreciation that the stocks and the bonds have, right? So this is it might sound like a simple concept, but it has a lot of benefits. And the benefits are something that sometimes get missed or they fly under the radar. And not many people, sit up and appreciate it. And the purpose of today's video is to highlight some of those points in the construct of a mutual fund and how it actually is got various so-called benefits without even being explicit about it. So one of the first benefits I really want to talk about, Mahesh, is the benefit of safety, which I think is not much appreciated or also well known to many people, to be honest. The Security Exchange Board of India, also known as SEBI, is the regulator of all financial products in our country. And they are, I think, you might agree, Mahesh, they are by far the best regulator in the world when it comes to administration and sort of overlooking the work of all these institutions, right? Including all these mutual funds. And they are extremely stringent.
Particular when it comes to small investors, right?
Small investors, they're very, very vigilant. They're extremely careful. They have lots of checks and balances in place. So the small investors cannot be taken for a ride. And I think this is sort of underappreciated as far as the mutual fund industry goes, right? I mean, there are lots of things SEBI has done to ensure safety for the small investor or even any investor, small, large, big, it doesn't matter. Any investor who's investing in a mutual fund has a few safeguards that they have incorporated. Okay. So I won't go through the exhaustive list, but I will give you one or two examples, right? So every mutual fund is structured as a trust. Okay. And there are a bunch of trustees who manage that trust. Now, as per SEBI, 2/3 of all trustees, which is 75% of all trustees, have to be independent of the mutual fund company that is launching a scheme.
Okay.
Which is essential. So there is complete independence. These 75% trustees and the AMC, which is the asset management company that is actually launching a scheme, a flexi cap scheme or a multi cap scheme or whatnot it is, right? So this is a very important sort of a safety measure that they have sort of put in, right? Second, I think is when a mutual fund buys any stock or bond or any kind of security, it has to compulsory put these securities in the hands of a custodian. A custodian is basically a person who takes, or not a person, but an entity that takes custody of the shares that have been purchased or of the bonds that have been purchased. Now, this is very crucial because you can almost close your eyes and sort of be 100% sure that your securities or the thing that you have invested in through the mutual fund will not magically disappear somewhere. Okay. There have been instances in the past where you have directly bought stocks from a broker. Okay. And that broker has had some mischievous behavior and they have sort of loaned against those stocks or have pledged those stocks without your knowledge. Okay. There have also been instances in the past, not recently, but some time ago, where the broker has gone bust, has gone bankrupt, and he's unable to pay your stocks. This will never happen in a mutual fund ever, because there are too many safeguards there. It has never even happened till date. That is a very big safety measure that most people don't realize that it's there. So this is one of the big benefits of actually investing through a mutual fund, where you have complete safety. What you've invested in is there, and nobody's going to miraculously take it away from you. I think everyone must have seen these advertisements in the TV and on the billboards, and they say that mutual funds are subject to market risk.
Market risk, yes.
Please read the offer document before investing. And people don't realize that what they're referring to is the market risk associated with the investing. So stocks can go down, bonds can go down, real estate assets can go down, gold can go down. So that's the market risk that they're talking about. But they're not talking about the structure of the mutual fund is risky. That is completely ironclad, strong. I mean, there has never been an instance where there has been a default by a mutual fund or there has been some kind of a malicious activity by a mutual fund. So this is a very important element that I wanted to highlight, that when you put your money into a mutual fund, your securities and your money is inherently safe as far as the organization that you're putting your money into. That is a safe bet.
Sorry, I just thought, let me just summarize what we discussed and you can say that this is right or wrong. So the first thing you said was that there is independence of the trustees. So there is 75% of the trustees are independent. So they are not connected to the AMC, which is starting this trust, right? So there is independence of the trustees involved. There is safety in terms of the fact that all the securities that the mutual fund owns is with a custodian. So there is the custodian is somebody who ensures that these securities are safe and will only be used to sell, or it can't be used to pledge or anything like that, right? So there is safety of the stocks or the securities that the mutual fund owns. And the third thing you talked about, which is very important, is that despite the disclaimer that people have to put, which is like mutual fund investments are subject to market risk, please read the offer document carefully before buying. This risk that they're referring to is the risk of the underlying securities going up or down, and not the risk in itself of a mutual fund investment. So the mutual fund investment is not risky. The securities that the mutual fund owns are inherently risky in terms of the fact that they can go up or down based on the market prices.
That's the perfect summary. And in fact, I'll go a step further and give you another example of how SEBI has sort of made sure that the trust of a mutual fund is not broken, is that not anybody can open up a mutual fund. I mean, it requires a lot of money. The minimum net worth that a person or an organization can have is 50 crores. And recently there's been a consultation paper issued by SEBI where they are proposing to increase the cap to 150 crores. It's a large commitment for anyone, begin a mutual fund company. And one very important thing SEBI has done is that, let's say if you have the 50 crores or 100 crores, once you acquire the license, you cannot transfer the license for 5 years. So you
You
cannot
can't
trade
just
into
buy to
this.
sell it, huh?
You can't buy to sell it. So it's not something that, okay, because they want people who are really committed into building a business in a mutual fund to be present in this business, right? They don't want to just have someone buy it for 50 crores, maybe sell it to somebody else for 65 crores. And this is not a trading business that they want to get into. They want commitment from the sponsors who actually put up the money to actually be in this business of 5 years. And then, yes, of course, after 5 years, they have the choice to exit through to another person or through another AMC, which has happened in the past. A lot of AMCs have been acquired by other AMCs. There has to be a commitment for 5 years at least. Well, there is a consultation paper now, but whether this gets accepted or not, we don't know. So this is one of the very important features I spoke about, safety. The other feature I want to talk about, and this is slightly simpler to understand, and is also, I think, a little misconception that I'm trying to sort of get rid of. And a lot of people tell me that investing in stocks is much better. But what they fail to realize is that when you invest in a mutual fund, your money is actually getting invested in stocks only. It's not going anywhere else. It's going into stocks. So when you put your 20,000, 50,000 rupees SIP per month, your money is getting divided into 30, 40 stocks.
Yeah.
Okay.
There's
So
proper diversification.
Proper diversification. So it's not that you're not buying stocks. You are buying stocks in an indirect way, but it has the same benefits of actually buying stocks directly.
Yeah.
This is a very, I mean, you will be surprised. A lot of people say, but mutual funds are like, it's not, they're exactly what you would do if you were investing in a basket of stocks on your own.
Yeah.
Okay. Whereas here, you're actually getting it to do it, okay, through a very established organization with a competent fund manager, etc. But you're getting the same benefit of ownership of a stock that you would get otherwise directly. So this is the first episode of why we believe mutual funds sahi hai.
Yeah.
The hidden gems or the hidden benefits of mutual fund. We will come up with subsequent videos as well to highlight some other unique features and salient features about mutual funds, which makes them one of the best investment vehicles available to any of us in our country. And many of these hidden benefits are unnoticed, unappreciated, or haven't been even talked about in the media.
Correct.
And this is our sort of endeavor, I would say, to make sure that these are at least brought to the attention of people, which they might have otherwise missed. So yeah.
You're so right. I mean, just imagine this fact that people are very happy to go and invest or put their money in a fixed deposit in HDFC Bank or a SBI, or a ICICI Bank and a Kotak Bank, for example. But these are the same guys who have sponsored these large AMCs, right? So look at all the big mutual funds. They are HDFC Mutual Fund, they are ICICI Mutual Fund, they are SBI, they are UTI. They are big names. And Nippon, for example, it's a big name in Japan, and it's having a mutual fund in India. So, the kind of names associated with mutual funds are big. You would anyway go and take a risk or invest with any of them when you put an FD there. And I think in a mutual fund also, the safety factor is huge.
It's probably bigger than FDs also. I mean, I think in terms of because there are so many checks and balances in place, like I said, the trusteeship, the sponsor amount of money, fact that, there is a board of directors. I mean, there are too many checks and balances there. And again, all your securities are with a custodian. So even if the AMC has to sort of, liquidate or something, you still have access to your stocks. Nobody can take away from you that. There is no...
Not at all. In fact, I wanted to tell you from our experience itself, which we need to tell people, I guess, is that now SEBI has made it extremely clear that you have to either nominate somebody when you buy a mutual fund, or you have to expressly state that I don't want to nominate, which means that there has to be a positive intent from your side to say I don't want to nominate, or you have to nominate, right? Which is incredible. So there is no situation that will happen where your money is lost even after you have passed on, right?
Exactly. That's a very good point, Mahesh.
These things have happened with stocks. There are so many. Otherwise, why do you think there are so many stocks lying with the Investor Education Protection Fund of India? It's money that has not been claimed by anybody, right?
Anybody. In fact, Mahesh, many of the clients who have opened accounts with us, as well as, hopefully new investors who will open accounts, when you open the account itself, you have to nominate your nominee.
Now it's very clear.
So you cannot actually even open an account without having that established. So you have just meant, what I was trying to say is that SEBI has done such great things to ensure that, if you or your family member has invested money in a mutual fund, in the event that
will ever be lost,
there is always a person, a next of kin, to inherit that money, and it doesn't magically disappear to some person or to a investor protection fund, and you can get access to that. And this is by far the best thing they have done by asking to nominate the nominee at the start of the account opening.
Correct.
Not at the end.
Yeah.
Okay. Or after a couple of years,
because you can't start a mutual fund investment without a nominee.
Which is, I think, a great point you made. And I think it just shows how serious SEBI is about this industry. And they want to protect every aspect of investors, big, small, it doesn't matter. And I think we have to appreciate these things, which sometimes get unnoticed, are unnoticed by people. And I feel that hopefully our videos and our subsequent videos will give investors even more confidence in investing in mutual funds. Obviously, we wish everyone watching this to invest and to build their wealth creation journey. But I think more than that, I think it's also important to highlight some of the right things that they're doing. So anyways, thank you everyone for watching. If you have any questions, comments, please write to us below. And if you want a free assessment of your portfolio, you can also write to us at hello@amsinvestments.net, and we'll be happy to answer any questions you have. And if you're even looking to start your mutual fund journey with us, please write to us. Thank you so much, and we'll see you again with another episode on Mutual Fund Sahi Hai. Thank you.
Thank you.